Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. Rick, what's happening on the major equity markets right now?
Well, sometimes I've got bad dreams about what lies ahead. You know, I think that just anybody with a clear head about what you see, essentially a stock market, a bull market being led by really just a bare handful of stocks, and I think you have to understand that it's all going to end badly, and I think the stock market decline is going to take everything with it, and I think we're going to see real estate finish what it started in 2007, eventually losing 70% of its value. We've got a perfect storm sort of building, and the Fed is absolutely hobbled. You know, nobody even believes that the stock market, that the economy is strong enough for the supposed tightening that the Fed has been bluffing about for so long. So the Fed has essentially painted itself into a corner, and it's going to get stuck with when the music stops, with all the bad paper that it sucked up in the great financial crash. So and I particularly, I'm always struck by outdoor festivals. You see a lot of people that play on the weekends, and the fable of the ant and the grasshopper, and there's so many grasshoppers out there, and I don't know that they understand what's about to clobber us, because I know this sounds very dark, very grim, but there's no way to add up the parts right now and come to a good resolution. We can keep postponing what has been going on for so long, but it's even the Wall Street Journal on page 1 is starting to recognize the dangers of a stock market rally carried by Amazon and Facebook, and so as if on cue, those stocks sold off last week, but we should have noticed by now that it only took a day and a half for them to get rolling up again. And I do have some 1,083 target on on Amazon. Amazon is the one stock I'm looking at as a bellwether, because I consider it the most important stock, most important company in the world. And as long as I've got higher targets, I think the bull market will persist. But you don't want to be on board when a ship starts sinking.
Why do you think people have ignored this situation for so long?
Because so many people have participated, through their proxy investments that are held by whatever pension they've got, pension fund. We've had a broad increase in home values in the recovery since the 2007-8 crash, so that the broad middle class, at least the ones that are not first-time home buyers, have done pretty well. And everything on the surface feels good. I think the most obvious disquieting thing is the closing, the shuttering of so much brick-and-mortar retail. Everybody sees that, and I think in our lives we know how hard we're all working in our businesses just to stay afloat. But the newspapers and the spin control guys and the Fed, it's like they're trumpeting a whole other. It's like a parallel universe, and I think that people mistrust it, but they're somewhat seduced by the fact that the broad stock averages are up near record highs.
Well, we all know that Google's real name now has been changed to Alphabet, And I said, so the FANGs really, if you change the G for Google to Alphabet, those top stocks actually spell famine. or if you don't pronounce it right, famine.
I put that out as Fagma the other day.
But
I was trying to think of a good acronym, and anyway, I had them as the Fagma stocks.
Well, exactly. And, as the name gets weirder for it, perhaps the situation for them gets weirder. And how healthy is it for a stock market to be held up by just 10 companies?
Yeah, go a little deeper. How healthy is it that a couple of those companies are just glorified advertising agencies? Facebook and to a lesser extent, Google. And, there was a time when the biggest advertising companies in the world did not sport valuations up near, upwards of close to $1 trillion. They're just ad agencies. That's all they are. And, we used to believe that ad agencies flourished based on the sale of real goods and services. But these stocks, Facebook and Google in particular, have gotten so far ahead of themselves. How much could they be worth, really, if they're only worth something to advertisers who are selling huge product? So, it's a very disquieting picture.
Yeah, if there's no products, there's no ads.
Right, but we've elevated the ad agencies themselves to the threshold of the most valuable companies in the world. How can that be? The companies, their clients should be the big and valuable companies, not the ad agencies.
We'll have more with Rick Ackerman right after the break.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
Welcome back. We're speaking with Rick Ackerman. Rick, on the currency front, the Canadian dollar over the last couple of days has made a really nice charge. Are people getting more confident in the Canadian dollar, or is the U.S. dollar losing steam?
This week it did trip a buy signal at about 75.5 U.S. cents. And if it gets past 78.6 cents, I think it could go all the way to 84. I don't know why, but that's what it looks like on the chart.
Is the factor with crude is there's just too much of it sloshing around the planet right now?
That's part of it, and the planet's businesses are not exactly going great guns. That's especially true for China, the largest consumer of crude. Essentially, China prices oil at the margin, and we don't really have the global strength in manufacturing to support it. If the energy story were driven by, a booming China story, then it would be believable. But all along, we've been hearing these phony supply side stories where if, chaos destroys the output of Venezuela, or Iran decides to get nasty with exporting natural gas or this or that, it will tighten the market. But what you're saying is that these reductions in supply at the margin are going to produce a bull market in crude, and that doesn't happen. Bull markets should be driven by robust demand, not cutbacks in supply.
Also, the so-called driving season in North America hasn't appeared yet.
Yeah, I was always suspicious of that driving season, Before I got in my car for that summer drive, oil prices at the pump had long since discounted my getting out there on the road, and it's hard to believe, really. But I think we're getting less seasonality because in between the seasons you get such enormous fluctuations based on who knows what reason. We used to have a press news media that could ferret out some of those reasons, but they're too challenged covering the Trump Russia scandal to be concerned about these fluctuations in energy prices that they can alter the flow of money by tens of billions of dollars, and at this point we just sort of shrug and pay the price.
Well, gasoline inventories have not been following the patterns that we have seen in the past.
Yeah, it's sort of crazy, I mean, you hear stories where people are just staying home more. I think that was a popular story last summer. But ultimately, who the heck knows? The prices, the price fluctuations at the pump are so extreme to begin with for no reason at all that they've kind of superseded the reasons as reasons.
Have people also been turned off from traveling? I know terrorism happens in far-off places, or so it seems, until here in British Columbia, one of the people killed in London was from a small town and a well-known person. So does that affect, the overall mood? People may not think they're being affected, but they just don't make travel plans anymore.
Well, I think that's true, and this has to be shaping up as the summer tourism bust in Europe, because you get these random killings, and you get the feeling that if you're in any sort of crowd in London or Paris, you're vulnerable, and that absolutely has to take a toll on tourism. So people are staying home, and I guess you can see a corresponding boom in Caribbean real estate. Americans are more and more wanting to stay close to home, and a lot of baby boomers are going south of Florida to find vacation properties.
We'll have more with Rick Ackerman right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Rick Ackerman. Rick, what do you see happening with gold? We hear that people are buying more gold ETFs, but the actual price hasn't gone up that much.
Well, the ETFs, they cover things on the basis of what's they're simply in the market, the same as the people buying the ETFs. And I've been assured by a fellow named George Milling Stanley, who works for State Street. He is the creator of the GLD ETF. He says that there could never be a paper squeeze on real gold, at least not one originating out of the GLD product. But I tend to discount these reported increases in demand to hold gold because the psychological factor, if everybody gets a mind that gold is where they want to be, what's happened over the last couple of years, in fact going all the way back to the beginning of gold's huge correction, call it a bear market if you want, it's just, it's hard to pin it down to supply and demand. So I'm not a big believer. It's just sort of a change of mind that's going to finally push gold up. And as far as the rallies go, I've got a 1464 target for the August COMEX contract. So that's leaves a couple $100 plus of room for a nice rally there. But I have to say that, watching gold on the charts from day to day, it's just nasty. I mean, it goes to my thresholds, without popping through them. I have what I call hidden pivot levels. And it gets to those levels, but if you really want to be bullish, these things should blow right through the levels. And then the corresponding corrections really take me, from a technical standpoint, to just one step shy of despair. So gold is really kind of screwing with everybody's heads, and I think I see it as an accumulation rather than a distribution. These broad fluctuations in gold are setting up a rally, and of course, being a hardcore deflationist, I can make a pretty good case against that. But in this case, I'm kind of going with my gut, and I think that all of the noodling around since gold finished its bear move from the July 2011 high is just is setting up for a significant move higher. But I'm not a gold $5,000 an ounce guy by any means, and I'm looking more in the range $1,600 to $1,900 an ounce.
Do you think Donald Trump is going to fire Janet Yellen because he just gave her his vote of confidence?
Well, that's the last thing he needs, really, is just to out of the blue to chuck her. I mean, it's arguable how much harm she's done, whether she's done more harm than Greenspan, let's say. But, the Fed seems to be doing its job, which is hoodwinking people into thinking it's going to tighten. That's the current Fed mission. And this is definitely not a time to change a couple cogs in the financial gearing.
Well, the reason I'm saying Janet Yellen's future might be short is, I was a sports director from 1978 to 96, and every time upper management says we have full confidence in the coach, you could guarantee that coach was gone.
Well, that's true. In this case, though, I don't think I'm going to be a contrarian. I think that even if he doesn't have full confidence in her, he just better let her do her job and not take on the political difficulties of making the case that someone else is going to be hugely better.
And when was the last time Donald Trump followed advice?
Yeah, he's kind of crazy, I mean, I voted for the guy, but I have to say I'm disappointed so far, and he's so bogged down in his own tweets. The tweets only give a crystal clear picture of the confusion in that guy's mind. He is all over the place, and you never know, just because he said something, really what's on his mind.
Do you think he'll ever get those tax cuts in to boost the economy?
Well, I've seen flow charts sort of follow the money. What do those tax cuts actually mean? And they don't mean too terribly much. So the most we could hope for, certainly not the simplification of the tax code that everybody has been praying for, except accountants. We get it all down to postcard size. So I think tax reform is just the same old political BS. Nothing's really going to happen. We're always going to be mired in the status quo. And I'm starting to feel that way about Obamacare, too. It seems like they're trying to move heaven and earth to replace it, but the substantive replacements have not come, and it's just getting deeper and deeper in muck, especially with most recently Anthem pulling out of the Ohio region. So all the big insurers, they don't like what they see, and that may force a political solution, but I don't think the political will is there to do the real, chopping, slicing, dicing work that's going to be required to really derail Obamacare, or let's say the Obamacare mentality, which is bipartisan.
Yes, I can't see Trump bringing in a Canadian-style basic medical thing where, Canada's Medicare system is nice. Your doctor and hospital expenses are covered, but prescriptions, eyeglasses, and your dentist and physiotherapy, those things you have to pay for yourself. So there's still a private healthcare industry, but you won't go bankrupt if you need a heart operation like you just had.
Well, but you have to remember that Canada, like Europe, started with, I guess you could call it a clean slate. They've essentially developed a centralized, socialized medical care system. But we, with Obamacare, or not we, but certainly the president, tried to superimpose on our own hugely corrupt, dysfunctional medical economy this Obamacare plan. So essentially the plan was an overlay on top of a system that was hopelessly corrupt. Corrupted mainly because of the government's influence that began with the tax deductibility of employer-sponsored health care. That's what skewed the incentives the same way, government tax policy has skewed so much capital into residential real estate. So government has been in the medical business in the U.S. in a bad way for so long that you can't back out of it. The Medicare, the cost list, the basic price for all of the procedures is so complicated, and it's so politically arcane, the reasons why certain things cost certain amounts, that we can't really get to where Canada is or Europe.
Well, exactly. I mean, I look at the gallbladder surgery I had here in Canada. If they billed me for it, it would be $3,500. The same operation in the U.S. is $25,000.
Right. It's pretty pricey. I just had I was in a ski accident, and I not only broke a leg, tore an ACL, a knee ACL, and a shoulder, but I discovered only a week ago that it had damaged the lead from my pacemaker. So they replaced the lead in the pacemaker yesterday morning. And I'm not even going to look at the bill. When I was privately insured, I looked, and I think the original pacemaker could have been $120,000. And I'm saying thank you, millennials, because you guys are going to be paying for this for the rest of your lives. So, but I feel like, with respect not only to Medicare, the Medicare coverage that I get, but the Social Security, my attitude is get while the getting's good, because there's no way the millennials are going to carry, that they will remotely be able to carry the burden of baby boomer retirement needs.
Rick, have a quick recovery.
Well, thank you very much, Jim. As you can see, I've recovered the use of my vocal cords in any case.
Thanks a lot for chatting with us.
Thanks for inviting me on.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks. His website, rickackerman.com. You're listening to HowStreet.com radio. If you have any questions for our guests or for the show, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.